Now, for a closer look at Walmart's earnings report, let's bring in Joe Feldman, senior retail analyst at Telsey Advisory Group. Joe, very good of you to join us.
Thank you. Thanks for having me.
There's a lot to discuss here, so let's talk about why it was that Walmart was able to beat the bottom line estimate from analysts like yourself on the street. 84 cents seems like a pretty solid beat for Walmart, yet the shares are slipping. So let's first analyze the beat. What would you say explained the performance in the quarter?
Well, they did a very good job just managing expenses, managing inventory. They got a lot of increased productivity out of the stores. So they're really operating very well and doing a good job. I mean, it was pretty evident from that earnings number.
Okay, but we also saw some concerns being raised by Walmart, or at least some facts being raised by Walmart that might lead to some concerns among analysts, investors about the activity in the foreign exchange market and how that depressed international revenue. How much more could Walmart have earned without the foreign exchange market volatility?
Oh, well, earnings would have been about $170 million higher, because of the FX impact. And that's been a pressure point up through the third quarter. Going forward, it should be become a tailwind. So that should help Walmart going forward.
Because of the weakness in the U.S. dollar?
Absolutely. The dollar is weakened, and so now we're starting to see kind of this late fall period where that's kind of reversing. We've heard that from Costco and others with pretty big exposure to international.
Can you quantify for us the relationship between Walmart's earnings, international sales provide about 25% of their revenue, so the relationship between the dollar and Walmart's earnings?
Well, I mean, on
a correlation basis. So in other words, if the dollar weakens by X percent, we might see a X percent increase in either Walmart's revenue or bottom line.
Oh, I see what you're saying. Yeah, no, I mean, you're going to see a solid increase. I mean, it had a bit of a drag, probably a 3% drag, so you would see that come back to them. The simple math of it should work, and it will help them out.
Okay, Joe, how do you feel about the guidance that Walmart gave us today? It doesn't seem as though it has really led to much enthusiasm on the part of investors. The stock is trading down in the early going.
Yeah, well, the real issue is the same-store sales guidance. I mean, the earnings guidance is very good. They continue to operate very well. That's pretty clear. I think the FX issues, everybody kind of understands that what's going on that way. It's really the fact that the same-store sales came in slightly negative, and their guidance is for, -1 to a +1 going forward, which is a little bit below expectations, and I think that's where the pressure is.
And where is the problem, effectively, that's creating that pressure?
Well, it's really the price deflation, I think, on food. We're going to hear that on the conference call. I haven't had a chance to listen to the call just yet, but I'm sure that's what they're going to talk about, because traffic was up and they're taking market share. So they are getting people in the stores and they're driving unit sales. We've seen pressures on food deflation.
Do you feel that Walmart is taking enough steps to control their margins? They have had gross margin improvement. The CEO just saying that sales, SG&A, sales, general and administrative expenses, going to continue increasing at a lower pace than sales.
That's right. They've done a lot of investment spending over the past couple of years, and they said that it was really peaking this year. So we should see that start to ease going forward. We think that the gross margins could start to flatten out, but you will see some benefits from the expense side as they start to leverage some of the investment that they've made.
Joe, great insights. Thank you very much for joining us on Walmart this morning. That's Joe Feldman, senior retail analyst at the Telsey Advisory Group.